Ever feel like there's this whole hidden world of finance operating right under our noses?
Absolutely.
We're diving deep on a system most people only hear about in whispers, the Bank Secrecy Act and anti-money laundering regulations, or BSA
All
AML,
right, BSA, AML.
for those in the know.
It's fascinating, really, how much goes on behind the scenes. I mean, every transaction, every account opening, it all has the potential to be part of this ongoing battle against financial crime.
It's like a financial arms race.
Yeah,
We're talking about stopping criminals from using banks as their own personal money launderies. And we're not talking about a few stained bills here. This is about preventing everything, from drug trafficking to human trafficking.
exactly. And the consequences are very real. Think back to the 2008 financial crisis. A lot of that stemmed from lax regulations and a lack of transparency. BSA-AML isn't just about numbers on a spreadsheet. It's about protecting the integrity of the entire financial system. And that impacts all of us.
Okay, so for our listener who maybe hasn't brushed up on their BSA AML lately, what are the key things they need to remember?
Well, the core concept is simple. It's about preventing criminals from taking dirty money, money from illegal activities, and making it look clean so they can use it freely. That's where the 3 steps of money laundering come in: placement, layering, and integration.
Right, like our aspiring parrot smuggler, trying to deposit his ill-gotten gains without raising any red flags.
Precisely. He can't just walk into a bank with a duffel bag full of cash anymore. Placement is about getting that money into the system, maybe by dividing it into smaller, less conspicuous amounts, or using less regulated channels.
So placement is about getting the money in. What about hiding where it came from?
That's layering, creating complex layers of transactions to obscure the money trail. Imagine a web of transfers, shell companies even using legitimate businesses as fronts, all designed to make it nearly impossible to trace the money back to its illegal source. And speaking of hiding identities, another group that keeps regulators up at night: politically exposed persons, or PPs.
PBPs. We're talking about politicians, their families, even close associates, who might be tempted to use their positions for personal gain.
Exactly. Imagine you're a corrupt official trying to hide ill-gotten gains. Shell companies are your go-to. But monitoring PP adds another layer of complexity because of the influence they wield and the potential for international implications.
Okay, let's unpack this shell company concept a bit more, because I think it's something a lot of people hear about but don't fully understand. What makes them so attractive to those trying to circumvent the system?
Shell companies are essentially businesses that exist on paper but have no real operations. They might have a fancy name, a registered address, maybe even a website, but no actual employees or business activities.
Yeah.
Their purpose: to obscure ownership and create a smokescreen for moving money around.
So it's like a mask for financial transactions.
Yeah, precisely. And the more layers you add: multiple shell companies, offshore accounts, transactions routed through countries with weaker regulations, the harder it becomes to follow the money.
And this isn't just happening in some far-off tax haven. Our sources point out that domestic shell companies, those created right here at home, are increasingly being used for illegal activities. It makes you wonder, are regulators always one step behind?
It's a constant game of cat and mouse. But the good news is regulators are getting smarter and more proactive. Take beneficial ownership transparency, for example. Many countries are now implementing regulations that require companies to disclose their true human owners, piercing the veil of those shell companies.
That's huge. It's like handing a detective a pair of X-ray glasses. Suddenly they can see right through those layers of obfuscation.
Exactly. And technology is playing a big role too. Financial institutions are using increasingly sophisticated software to analyze transactions, identify patterns, and flag potentially suspicious activity.
So it's not just about someone walking into a bank with a suitcase full of cash anymore, although I'm sure that still happens.
Let's just say the methods have gotten a bit more sophisticated. We're talking about things like microstructuring, where criminals make numerous small deposits just below the reporting threshold to avoid detection.
It's like trying to sneak a giant cake into a party by slicing it into a million tiny pieces, hoping no one will notice.
A very accurate analogy.
Wow.
But those tiny pieces add up, and that's where data analysis comes in. Algorithms can now detect patterns and anomalies that would be impossible for a human to spot.
Which brings us to the human element. The financial detectives working behind the scenes. It's not all just ones and zeros, is it?
Absolutely not. Technology is a tool, but it's the human analysts who ultimately connect the dots. They're the ones who understand the nuances of different industries, who can spot unusual activity that might not set off an algorithm, and can ultimately decide when to escalate a potential case.
And this is where know your customer comes in, right? That whole KYC thing we hear so much about.
Exactly. KYC is about understanding your customer's business, their typical transaction patterns, their risk profile. Think back at the Panama Papers scandal. That's where lax KYC really blew the lid off a massive network of shell companies and offshore accounts, used by the wealthy and powerful to hide their assets.
It's a reminder that this isn't just about stopping drug lords and terrorists. It's about ensuring fairness and transparency in the entire financial system.
Precisely. And that's why BSA AML is constantly evolving. New technologies, new criminal tactics, and evolving global threats all require regulators and financial institutions to stay vigilant and adapt.
It's a never-ending game of chess, isn't it? Trying to anticipate your opponent's next move while also trying to protect the entire board. What are some of the biggest challenges facing BSA/AML in this constantly shifting landscape? So we've got evolving regulations, increasingly tech-savvy criminals, a global financial system that's more interconnected than ever. Where do we even begin to tackle these challenges?
I think it really comes down to one word: collaboration.
Collaboration.
Yeah, financial institutions sharing information with each other and across borders is going to be absolutely crucial.
Right, because criminals don't exactly respect national boundaries.
Exactly. So why should our efforts to stop them?
Makes you think of that old saying, if you want to go fast, go alone. If you want to go far, go together.
Mhm. But isn't sharing financial data incredibly sensitive? How do we balance transparency with privacy?
That's the million-dollar question. There are some really interesting initiatives, though, like information sharing platforms, where institutions can securely and anonymously share red flags. Typology is basically the latest tricks criminals are using. That way, everyone benefits from that collective intelligence without compromising individual customer data.
So it's almost like a global early warning system for financial crime. Exactly. And then there's the role of technology, too. Artificial intelligence and machine learning are really transforming how we detect and prevent financial crime. I mean, these tools can analyze massive data sets in real time, spotting patterns and anomalies that would be impossible for humans to catch.
Yeah, it's like having a digital detective constantly scanning for suspicious activity. But with all this talk about technology, does that mean the human element is becoming obsolete?
Not at all. In fact, I'd argue that it's more important than ever. Technology can help us connect the dots, but it's still those human analysts who are interpreting those connections, understanding the context, and ultimately making those judgment calls.
So it's not about replacing humans with machines. It's about giving humans better tools to do their jobs more effectively.
Exactly. And that requires ongoing training, keeping up with the latest trends, and really fostering that culture of vigilance and ethical conduct within financial institutions.
Because at the end of the day, regulations and technology are only as effective as the people implementing them. It's really a shared responsibility to safeguard the financial system.
Absolutely. And that's why understanding BSA/AML is so important, even for those who don't work in finance. It's about being informed consumers, being aware of the risks, and demanding that transparency and accountability from the institutions we trust with our money.
Because a safer financial system benefits everyone. So to our listener out there, the next time you hear about a financial scandal, a data breach, or a money laundering scheme, just remember that unseen world of BSA/AML working tirelessly to protect us. It's a complex and constantly evolving battle, but one that's crucial to winning the fight against financial crime.
And remember, knowledge is power. The more you understand about the intricacies of the financial system, the better equipped you are to navigate it safely and responsibly.
Well said. A huge thank you to you for guiding us through this deep dive into the world of BSA/AML.
It was my pleasure.
And to our listeners, we encourage you to check out the show notes for more information and resources on this fascinating topic. Until next time, stay curious, stay informed, and stay safe.